You're listening to Illinois Public Media's Closing Market Report and on the web at willag.org. That's willag.org. Joining us now for a look at the futures market is Dan Zwicker of ADM Grain Group in Decatur, Illinois. Good afternoon, Dan.
Good afternoon, Dave.
Double-digit losses. The dollar's screaming higher today. The grain's wilting under that pressure. But I wonder, and I want to start with corn, and I want to start with the March, and I wonder really how much technical damage was done, because last week we were talking about corn being essentially in a range between 370 and 423, and where we finished today is about midway in that range.
And I think that'll be the thing to kind of watch over the next week or two, basically in light holiday trade. I think if you count out the days, we got, about 6-7 days left of full trading and a couple half days. So I think that'll be what we'll want to watch. If you look at the individual March corn contract, if you kind of draw a trend line off of your September low points, it kind of comes into play somewhere here around this 385 level or thereabouts. And we'll have to kind of see whether or not that kind of holds or if we slip on down to the 375. So there is reason to think that, we may want to kind of stay in that range that I mentioned here a week ago or so. But you definitely have to pay attention to what is happening over on the dollar front. That's clearly telling us that a major low is in place, and the long-term trend shift to higher is underway. Now, there's probably going to be a lot of noise in that, but a lot of this strength that we experienced this fall was no doubt due to, a pipeline, an empty pipeline, and harvest delays. But the dollar was at the forefront of a lot of that strength as people sold the dollar and bought commodities. And you can kind of see, here a week or two ago when the dollar took a big jump, gold had like a $50 loss. Today here we're seeing a $31 loss in gold. So we are seeing unwinding of that, short dollar, long commodity spread.
Looking at the U.S. dollar index monthly chart, if you do some Fibonacci numbers off of the March high to the lows that we made last month, we've already taken out about the 23.6% point, and I guess you would say that 38.2 is right in sight.
Yeah, I think, and like I said, I'm when you look at the bigger picture and you try to be objective about it, the dollar has penetrated both the November high and October high, and for those of us that look at major macro charts, we look at quarterly charts, you're going to see that the dollar is in excellent position here to close out the fourth quarter with a hook reversal to the upside after a long decline pretty much all year long from the March highs. The other thing is it did hold above that trend line that we've talked about here for the last 2 or 3 weeks, right above this 74 area. So when I look at the monthly chart, it looks to me like there's a head and shoulders bottom forming on the dollar chart, and we've got a long ways to go up to the upside. And probably the key factor here will be that the economy will have some inflationary pressures in it, and the Federal Reserve Board will have to start raising interest rates, and that will generate interest in owning the dollar as to collect those higher interest rates over time.
Yeah. Let's turn our attention then to the beans January charts. Today we declined with the double-digit losses down to that support level in the 1021 to 1019 area. Managed to kind of just hold there at the end of the day, but I would guess that we're at a point where you wouldn't want to see any more losses if you're a bull.
If you're a bull, you kind of want to see this bean market kind of catch in here. The 50-day moving average on the March futures is sitting down here around 10:15. We close at 10:30. If you draw a trend line off of the October low and the early November low, we did close below it, but we'll have to see whether or not it maintains a consecutive close underneath that, or if it turns around and bounces back tomorrow and closes above it. But yes, if you want to be a bean bull, the market kind of needs to hold right in here. This March futures in this 10:30 area, and continue to march sideways, or otherwise you're vulnerable to some pretty steep declines in here, I think.
Now, how much credence, Dan, do I give all of this price action in December on these charts going forward into January?
Well, you don't want to ignore it, but December is a month that's noted for issuing a lot of mixed signals. And this could be part of that. And I think the fact that we're in a noisy environment to start with is probably more aggravating. But I think, and I've mentioned it before, generally speaking, when I look at the longer-term cyclical influences, I'm a little concerned as we move into 2010 that overall commodities could be more in a negative defensive mode. I think the dollar is going to be more on the offensive and rising, and a rising dollar is basically deflationary type price action. So I guess the dollar's telling me that maybe we are in for some defensive price action as we go into 2010.
Thank you, Dan.
Very well.
Dan Zwicker of ADM Grain Group. He is in Decatur, Illinois.